Good morning, ladies and gentlemen, and welcome to the show this Thursday, November 10th, 2022. I just had Windows come on and interrupt me twice, and I had to start my show all over again. Now, it's pretty bad for me to have to start my show because generally when I do it in one take, one cut, right through beginning and end. And if there's something that's happening around me, I just kind of ignore it. It's pretty bad. Windows messes me up. So I have to start it all over again. 1 minute into the show. Anyway, but we're getting started again. So welcome to the show on this Thursday, November 10th, 2022. I'm glad to have you guys here. And now what we want to do is we want to get started talking about the weirdness that's going on right now. Yes, we are entering into disinflation right now because we were up over 8% on the CPI numbers, and now we're down like to 7% and stuff and dropping. Well, basically what disinflation is when you have inflation, but the inflation is lessening on its way. Of course, disinflation is definitely the road to deflation because that's where it's actually pointing toward when you have disinflation. But let's get started now, and let's open up the charts right here. Now, I want to point out this article right here. It says, this one in blue, highlighted in blue, it says, Crypto Crisis. Bitcoin collapses by 70% and sees no hope. It says, cryptocurrency prices began to stabilize. Fresh drama derailed the sense of relief that was finally settling into the crypto market this year. And so on. Why I'm pointing this out to you guys is Bitcoin is really in a tight bear right now, and it's down. Bitcoin and all the cryptos. And I find this interesting because we were in a bull market, a massive bull market. Everybody loved crypto. Everybody thought it was the next great thing. Back when times were not near as bad as they are right now. And the financial system wasn't in near as much trouble of going into a hyperinflation. What's going on right now? Because here we go. Let's look at this article. A major problem. The U.S. is now a record $31 trillion in debt, made worse by rising interest rates. It says, and this is who holds the IOUs. Who does hold the IOUs? All of this debt. It says, what's happened there? Oh, I hate it when they do stuff like that. Only on the computer they do all this garbage. Anyway, getting back to what we're talking about here. Who holds all this debt? Who holds the IOUs? Gross national debt in America has now hit new heights, surpassing $31 trillion, according to a recent U.S. Treasury report. If you find your head hard to wrap your head around this, it basically boils down to more than $93,000 of debt for every single person in the United States of America, including children. So if you have a child, he's going to have $93,000 worth of debt heaped on top of his head as soon as he's born. From cradle to grave. It says the Treasury finances the debt with a lot of short-term borrowing. So let's see. Let's look here who they're going to say holds this debt. Deficit, several large bills. The story continues. Trading down here real quick. Or are they going to get to the point where they say who's actually wants all this debt back? Because, in my mind, I don't care who holds this debt. It's time to just say, enough's enough. You created all this debt from nothing. And you've heaped it on all of us, so a child born is $93,000 in debt before he's even born. That child never asked for $93,000 worth of debt. Enough's enough. Whistle for your money. So it gets here. We get here. It says, who owns the American debt? There are different kinds of national debt. Think about like having a credit card mortgage or a car payment. It's all debt, but different. The United States Department of the Treasury manages the national debt, which is split into two types: debt that one's government agency owes, and another debts that are held by the public. So, It's the Department of the Treasury. You know, this gets out of control. Just cancel it all. That's the way I see it. Let them whistle. All whistle for their money. That's what I think. That's just my opinion on it. But that's anyway. Let's take a look at the silver price. And I'm going to show you the stuff's going on here today. We're up 71 cents on silver today at 21.74. And this is another thing why I say about cryptos. You know, we're never closer right now than we've ever been to the inflationary period that's going to drive cryptos insane and up in price. And it's going to drive gold and silver insane and up in price. In other words, what I'm saying, moonshot time. You know, and silver's doing good, rather good. I mean, it was like $18 just a couple months ago. Now it's $21.73 and heading for $22. It's strong right now. Look, it's up 70 cents on the day. Let's take a look at silver. I mean gold. Sorry. Look at gold here. 1744 and shooting up like a rocket, up $37 on the day. Crypto's weak right now. 881 billion. It's at 17,705 for Bitcoin, 1,330 for Ethereum. The Dow Jones today, we're seeing this 894 point jump. You know, this is over 800 points up in one day. And I'm going to tell you something. If you were charting this bear market that started right here, basically the 10th of 2021, and if you charted this downwards, it has to follow a certain, even though it goes up and down in a choppy fashion, it follows a certain curve there, or a certain charting pattern. If it goes too high, like right now, and it gets up too high above that charting pattern, it starts to cross the Rubicon where it's more than just a bear market rally. I mean, you can't exceed your old highs and say, hey, we're still in a bear market. You know? At a certain point, you have to concede and say, hey, this thing is it's coming out of the channel it needs to be in for it to be continuously in a bear market. And we're right on that edge right now. If it goes any higher than this, I mean, we're going to have to start saying, hey, you know, are we still in a bear market? I mean, this is getting a bit much. But there's a lot going on out there today. Like I say, 85.22 for crude oil. It's down 61 cents. The MOVE index is 124. And this is the same thing. If this continues to fall, well, this pattern that we've been building over the entire year will be busted. And we're right on the edge right now. If it falls any more lower than what it is, say if it falls, say, below 110, well, it's busted. This whole year-long pattern will have been busted. And this is why I say stuff's going on, because look in the bond market today. Look at the movement in the bond market today. We're seeing the 10-year was well over 4%. It was like 4.2, I think, or something like that. And we're down to 3.85 today. We've dropped 29 basis points today. That's over 1/4% in one day alone. 21 basis points on the 30-year. These are massive drops, ladies and gentlemen. Major moves in the bond yields to the downside. So, what does all this mean? Because it's happening suddenly. Major movements in gold and silver to the upside. Major movements in the markets to the upside. Major moves in bonds to the downside. Is something happening behind the scenes that I'm not aware of to move these markets like this, in these directions? Is it the fact that inflation has fell back a little bit and they're saying to themselves, well, the Fed pivot's going to come earlier, and they're getting excited about it? Or is something happening behind the scenes where money and liquidity is starting to pour into the system that we can't see, that I can't see anyway on here, and nobody's talking about? Something's going on. That's what I'm saying, guys. And look, it's showing in the dollar index too. The dollar index has taken a steep drop down to 108.73. I mean, it was 114 just a few days ago. That's a big drop from 114 down to 108. And I'm going to tell you guys what the marker is for hyperinflation. Yes, we'll have inflation if the dollar index drops down. It can drop down below 100. It can drop down below 90. And yes, we'll have inflation. But what point does it drop below when the inflation changes into hyperinflation? When it drops below 70. When the DXY drops below 70, that's when we're going to start to have hyperinflation. And so when you see the DXY dropping like this, from like 114 down to 108, it's moving in that direction. But see, at the same time, we've got disinflation out there. So you could say, well, inflation has peaked and now we're moving in the opposite direction toward deflation. And this is what happens when you get a central banks around the earth who are manipulating the entire global economic system, is all run on manipulation. You get these weird swings where you have the economy, one part of the economy deflating and another part of the economy inflating. So you get this very hard to predict market movements and things like that, even for good market analysts in times like these, when you got total market manipulation, because it depends on what the central banks do out there. And so the person that's best at predicting what the central bank's next move is going to be is the person that's best at predicting what the economy is going to do. Not so much the person who is actually looking at the economy overall and able to, in the markets and everything else, that doesn't matter. Charting doesn't matter. Nothing matters. What really matters in a time like this, when you got so much central bank manipulation, is what the central bank's going to do next and what tricks they got up their sleeve. So an expert on central banks and what the central banks are going to do knows more about what's going to happen to the future of the economy than anybody out there, and kind of predicting what the central bank's going to do. And so there are trends that are happening right now and patterns that we can follow, but what the central bank does is actually even more important. So we're seeing new trends develop right here suddenly, and something's going on behind the scenes with the central banks that are manipulating this into effect. We'll figure out what pretty darn soon is going on here, because I've seen hints at it over the last couple months. It's liquidity moving behind closed doors, and I'm going to figure it out, and they don't announce really what they're doing anymore. They just do it behind the scenes. Well, that's sneaky as far as I'm concerned. It's being underhanded because it's our money that they're playing with. It's our tax-paying dollars. And yeah, we are $31 trillion in debt. And whose fault is that? The central bank. And I mean, they've been playing with our money for a long time. It's ours. And it's like we don't have any say in what they do. And they don't even tell us what they're going to do. They've assumed that much control over something that we should at least have a little say in what goes on with our money. And it's just not fair when a kid is born and he's not over $90,000 in debt before he even takes his first breath. Anyway, thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.